Cathie Wood, the founder and CEO of ARK Invest, has made waves in the financial community with her audacious and progressive approach to investing. Her company's ownership of a Tesla stake is unquestionably one of her most well-known investments to date. This is a noteworthy investment due to its size, as well as the conviction and insight that went into it. Even though many on Wall Street were pessimistic about Tesla's possibilities, she has been a strong supporter of the company's potential for a number of years. But even the most seasoned investors may make mistakes, and Wood seems to have overestimated Tesla, which has forced her to revise her prognosis to an even more optimistic level. We discuss Wood's opinions on Tesla's market share, battery prices, and her continued optimism for the company's future in this video. But be sure to hit those like and subscribe buttons before we begin. Founder Cathie Wood is a well-known person in the investment industry with a focus on disruptive innovation. When Tesla and other favorite stocks skyrocketed in the early days of the outbreak, many people earned enormous profits. However, those profits were erased by a disastrous sell-off in 2022. At about $487 million, Tesla is currently the fifth largest asset in Wood's investment company, ARK. In spite of the negative macroeconomic climate and high interest rates that have caused the market to decline overall, Wood has maintained his bullish outlook throughout the downturn, projecting that the price of a share of Tesla stock will reach $1,500 and $500 in the next 5 years. Wood's $487 million Tesla investment is primarily concentrated in its flagship ETF, which has added over 300,000 Tesla shares to its portfolio in the past month. Tesla shareholder Cathie Wood forecasted in an interview that the company's stock price will hit $1,500 in the next 5 years. She stated, "It's true," in an interview with Barron's. In reference to the recent reductions in the price of Tesla models, there are people who don't buy his cars now. But if he does what we think he's going to do on the cost side, she said, there are a lot of people who will use economics as a guide, and I think there are a lot more of those people than there are of the naysayers around Twitter. Bringing Tesla's rival goods to market was one of ARK Invest's main objectives. ARK Invest had forecast that Tesla's 17% market share of electric cars globally, including China, would shrink. However, the company's market share rose to 18%. According to Wood, Tesla is the Mercedes of electric vehicle range and other critical metrics. Wood also mentioned that Tesla's battery costs are declining 3 to 4 years faster than those of any other automaker. Consequently, in order to compete with Tesla, all other automakers will need to sell their vehicles at a loss. In response to a question about her thoughts on Tesla, after 5 years, Wood stated that the firm has an edge over rivals if cars are compared based on their power and range rather than their brands. She continued by saying that other automakers won't be able to match or surpass Tesla's combo unless they want to lose money on their vehicles. She did concede, though, that although other well-known automakers like BMW and Volkswagen have made significant advancements recently, Tesla's power and range still stand alone. Reacting to a tweet from ARK Invest director on January 7th, renowned investor Cathie Wood stated that the electric vehicle EV possibility is enormous on its own. Branding is a unique concept. Although there are brands from other automakers and many people are loyal to them, Wood predicted that consumers would start to switch from gas to electric vehicles and compare the specifications of the various models midway through April 2026. ARK Invest published an updated open-source Tesla valuation model, estimating that Tesla would be worth $460 per share, even though ARK is still buying Tesla stock. It's crucial to keep in mind that the Tesla model was drafted before to Tesla's August 3rd for first stock split. Cathie Wood is still really optimistic about Tesla in spite of this. Tesla leads the industry in asset manager holders. Cathie Wood bought the ARK Innovation ETF several times in January, and it currently ranks third in the industry. Due to worries regarding supply and demand, shares of Tesla have dropped 58% over the last year, yet Cathie Wood has continued to pour money into the company by acquiring further shares on January 18th. On January 18th, ARK Funds acquired 49,983 Tesla shares, which were worth $6.4 million at the end of trading. A CNBC webinar claims that the stock will see significant gains in the future. Over the course of the next 5 years, the stock of electric vehicles alone might nearly double. And in the following 5 years, it's closer to 13 times, assuming you believe in driverless vehicles at all. Therefore, our confidence in Tesla is at its highest point ever. Wood acknowledges the wisdom of the company's recent pricing reductions. She said that Tesla will pursue an aggressive price strategy and that the company can afford to do so because it is leading the industry in innovation and has the lowest cost structure. Nevertheless, from a margin and profitability standpoint, other manufacturers will suffer greatly from having to match these price reductions. However, Musk's Twitter distraction, as some have called it in reference to his acquisition of Twitter and his contentious comments, continues to raise serious concerns. As recently disclosed to Yahoo Finance by Wedbush analyst Dan Ives, Musk is the only one who could put out the fire alarm that he started in Tesla shares. Musk was questioned to clarify his stance on Twitter following the incident, and this is his most recent testimony in a lawsuit brought by Tesla shareholders. Elon Musk, the CEO of Tesla, said he thought it was ridiculous that his tweets might have an impact on the company's stock price. He previously tweeted that he thought the price of Tesla stock was too high, and it rose. Given a scenario in which the stock price appeared to have been changed, that could be seen by casual observers as an admission that his tweets have an impact on stock prices. Musk, however, later asserted that a correlation could only be made if the stock price truly fell. Following his first remark that the price was too high, it's not like people would automatically listen to or act on anything I tweeted, he stated. As a result, the CEO continued by saying he could find no evidence of a connection between his tweets and Tesla's share price. Based only on its EV business, ARK's 2026 price forecast for Tesla shares would be about $500 per share, or 4 times its current valuation. The revised projection has taken into account the 3-for-1 stock split that took effect on August 25, 2022. In addition, mid-April 2022 saw the disclosure by ARK analyst Tasha Keeney that the firm would no longer incorporate ride-sharing or autonomous cars into its valuation process. These two factors will, the company claims, account for more than 60% of Tesla's valuation over the next 5 years. Furthermore, she stated that the anticipated $500 per share stock price is a massive 4-fold increase over the current stock price. While it makes sense that ARK Invest did not include ride-sharing or complete FSD in their valuation, full FSD might be possible soon, which would result in a massive increase in the price of Tesla's shares. With Tesla's full self-driving FSD technology, the car can drive itself in some circumstances, but a safety feature keeps drivers from giving up total control. Elon Musk, the CEO, claims that drivers will soon be able to turn off the safety feature. In particular, there is a function called the steering wheel nag that reminds the driver to keep their hands on the steering wheel at all times. The technology demands the driver to move the wheel frequently to make sure they are paying attention if they don't. According to Musk, an update likely delivering this functionality is due in February. A recent Twitter user proposed that users with more than 10,000 miles on FSD beta should be given the option to turn off the steering wheel nag. Musk agreed. Therefore, even ARK's optimistic $500 per share price estimate may be too low. Given that full FSD will soon be implemented, it may be impossible to forecast with precision the potential peak of Tesla's stock price. Subscribe to our channel to receive more predictions on Tesla stocks. Please hit the like and subscribe buttons if you enjoyed this video. I'll see you in the future one.